Welcome to the channel everyone, my name is Nick Armenis and in today's video I'm going to cover off my best ASX stocks for December 2021. Now before we get any further guys, please subscribe to the channel, give the video a thumbs up, hit the notification bell and stay tuned for more ASX and stock market updates. So before we go any further, obviously not a financial professional, please do your own research. I always go into my interesting mid and large caps first. So the first one I'm going to cover off is Webjet, ASX ticker WEB. So what does Webjet do? They're an online travel agency operating in Australia and New Zealand with customers across global consumer and wholesale markets. They consist of a B2C, so business to consumer division comprising the Webjet, Online Republic brands and Webjet. And a B2B division comprising the Lots of Hotels and Sun Hotels brands Fit Rums. So it's currently trading at $5.49 and it has a market cap of 2.087 billion. It has a 52-week trading range between $4.36 and $6.89. And as you can see, in 2020, it had a pretty rough year. It has since recovered quite a bit, but obviously very, very rough times during lockdowns and things like that. So my investment thesis for this business is it's exposed to fluctuations in sentiment around the virus, right? So this allows for short-term trades. So whenever there is negative news, you would buy it. And once things start looking super positive, you sell this stock. I still believe that that trade is alive and well. I don't know if this is a business I would hold for the long term. This is probably more a trade, and given what is happening at the moment with a new variant, lots of negativity around travel and things like that, and this is my preferred way to get exposure to travel due to the capital light business model when compared to airlines and Flight Centre, ASX, FLT. Another way you kind of can play it is through oil as well, guys, using the fuel ETF. It kind of also tracks a similar pattern, or the Jets ETF, which is an airlines ETF listed in America. So as the economy continues to open up, there is likely to be pent-up demand both locally and globally for travel, and obviously Webjet is a pretty good way to play it. Most recent updates by the team shows a reversal in the cash burn. So it went from burning $5.5 million in cash per month to a surplus of $3.5 million per month. So big difference. Still only sitting at 63% of pre-COVID levels. They've drastically cut expenses. So once more travel is allowed, there will be a much leaner business. So once they've cut out all that fat out of the business, they're going to be making much better margins in the future. So that's a little bit about Webjet. Let's move on to the next stock. So Uniti Group Ltd, ASX ticker UWL. So what does Uniti do? So they provide internet and telecommunications products and services, but they mainly focus on the acquisition and construction of communications infrastructure such as fiber, wireless towers, and ground leases. I will note that this is a bit more of a complicated company than some of the other telecoms out there in terms of trying to understand it. It is a little bit different. It's not just an ISP. It also has a fiber network that it is installing. So that's partly a big difference between some others like, say, an Aussie Broadband and the likes. It has a market cap of 3 billion, guys, and it's currently trading at $4.39. Its 52-week trading range, as you can see, and it's been on a belter from $1.42 to $4.45. So we are at the top end of that trading range. So there's always, when you get to these such high levels, there's always a potential for a pullback. But in terms of as a long-term investor, I'd still be fairly comfortable personally buying into this. Obviously, do your own research, just because it does have such a big future ahead of it, and it's going to be able to continue growing earnings and revenue, in my opinion. So investment thesis for this stock, really strong annual report with revenue and EBIT growing 175% and 254% respectively. So they've got a great management team that is focused on growing market share in the fiber to the premise, technology infrastructure, and data infrastructure areas. And they're going to be doing that by expanding product and service offering, organic growth, and acquisitions. And on acquisitions, they've got a pretty good track record of acquisitions that drive shareholder value. The most recent ones being Opticom and Telstra Velocity Network. Opticom, though, did have some issues where they actually had to pay a lot more than initially was required due to an issue with a super fund. It's actually entered the ASX 300 and then quickly got into the ASX 200, which means it's going to get a lot more exposure from funds, ETFs, and things like that. Just because when something does become a bigger business, then all of these ETFs start buying it. All of these funds start looking at it as a potential investment. When it's too small, they just don't do that. So guys, please let me know in the comments below if you are enjoying these stocks, and then if there's any stocks out there that you want to see covered, please let me know. So I now move on to my interesting higher risk and small cap plays. Obviously with higher risk, there's a potential for higher reward, but obviously the risk is higher in these, and I just want to highlight that. PPK Group Ltd, ASX ticker PPK. So what do? They manufacture and sell boron nitro nanotubes in Australia. It also offers lithium sulfur batteries, white graphene, and body armor, and digital platform for proactive road safety analytics and management. It's a really broad company. It's quite hard to understand, and I'm only just starting my dig into this, guys. Just want to let you know because there's a lot to it, and I'm not a subject matter expert by any means. You know, if you are, please let me know below. But this is just what I've seen in my limited research. They're currently trading at $11.53 with a market cap of just over $1 billion. The 52-week trading range is a massive one, from $4.71 to $21.95. We're kind of in the middle of that at the moment at $11.53, and as you can see, kind of in the last 6 months, bit of a downtrend there. So what is my investment thesis? This is a world-leading, potentially game-changing technology with a wide range of applications. Obviously, the wide range of applications means they can make more money. So they've been working with Deakin University to consistently produce the highest purity boron nitride nanotubes, or BNNT. So BNNTs are 100 times stronger than steel and 50 times stronger than carbon fiber, despite being lighter and more flexible. So they have some notable strategic positions in other businesses as well. See the battery tech company LIS Energy, which was recently listed, 3D dental technology, and a bunch of others, guys. The list goes on. Experienced and diverse management team with a proven track record in creating significant value for investors. But please note, guys, as I said, this is a pretty strong downtrend here that may be worth waiting for it to reverse. And this was due to a partnership where they were going to make antiviral face masks. The stock market did not like that. But to be fair, this stock had gone on an absolute belter, so that's also a potential reason. It just got way ahead of itself, you know, with an over $2 billion market cap for something that's still in such early stages is just a bit ridiculous. But in the future, very, very possible that this will become a bigger company. I wouldn't be surprised if it does continue to go lower. But I just wanted to put on your list and do a bit of research into it, because I'm definitely, before buying, needing to do a hell of a lot more research in this. Next company is Camplify Holdings Ltd, ASX ticker CHL. So what do? They provide a peer-to-peer digital marketplace platform to connect recreational vehicle RVs, so think of a camper van, and small medium enterprises with a fleet of RVs to hirers. So people that are hiring. So it connects people wanting to hire an RV. So the company operates Camplify, a platform that offers RVs, including caravans and camper vans for rent in Australia, New Zealand, the United Kingdom, and Spain. They're currently trading at $4.07, and their 52-week trading range has been between $1.20 and $5.02. They have a market cap of $157 million, and as you can see, very, very strong uptrend. So what is my thesis for this stock? I like the marketplace model that connects people. Think things like REA, Seek, and the like. And it seems to be a very scalable platform across many geographies, so different countries. Unlike a lot of recent IPOs, what I have liked is, in doing my research, I've seen that they've actually smashed what was thought was going to happen in the prospectus and beat it quite considerably in both revenue and net profit after tax, which is actually a loss. So they had a smaller loss than they thought. This is despite the fact that there's obviously been rolling lockdowns and lots of restrictions, and this still hasn't impacted them, which is good. That said, though, a lot of people have been holidaying domestically, but I guess when you get an influx of international visitors, you'd imagine that their business will increase as well. So fleet hirers and total RVs on the platform all continue to grow. So to me, it seems like we're quite early in this journey, and I've never heard of this company. And I like caravans and RVs, so I even help manage some businesses in the space, their marketing. So I've never heard of it, and that probably means that we're quite early on in the journey. It's not really talked about in any stock forums, news, things like that very often. It's quite new, quite small, so potentially we're very early on into a company that could continue to grow much, much bigger. And they do continue to launch new products. The next business is Artrya Limited, ASX ticker AYA. What do? They're a medical technology company that uses artificial intelligence, or AI, powered image analysis software to enhance the detection and management of coronary artery disease. They serve radiologists and cardiologists worldwide. So if you can see here, you see those little bits in there in the arteries. They can actually detect when there's a build-up in there through imaging. So which is really, really cool, especially with harnessing that artificial intelligence. It just goes that much better than the human eye and the human brain. So it's trading at $1.60. It's got a trading range of $1.37 to $1.75. It is obviously very early on in this stock's life. So what's my thesis? We've got a large total addressable market, or TAM. Coronary heart disease impacts an estimated 126 million people worldwide, and this is getting worse with the aging population. They're planning to expand into the US, UK, Canada, and Europe. So we've got an expansion. They recently won a tender to be appointed as an AI supplier for the NHS in the UK, and they were added to the TGA register as a Class 1 medical device. So that gives us, some confidence that medical boards and actual people that approve things are seeing that this is a good product, or at least it meets their requirements. And they're using a SaaS subscription model, which means customers don't need to pay expensive upfront fees, making it easier for them to get into. And then it gives some strong margins there. Okay guys, I hope you've enjoyed this video for December. I wish everyone, if I don't hear from you or see you or whatever, a very, very happy holiday period. And I will try and launch as much new content in the future. It's been a busy time with work, but if you do enjoy my content, please subscribe and let me know what you want to see more of. And I will continue to do this because I do enjoy it, even when I don't have that much time. So thanks so much guys, and see you in the next one.